Payables and accrued liabilities. Well, I just got a property tax bill in the mail. I don't want to pay it, but let's talk about what we've got for these payables and accrued liabilities. We've got some different items. We got journal entries, right? The journal entries, I don't mind journal entries. You know why? They tell the story. They tell a story of what's going on in our financial statements and use them to your advantage. Don't be intimidated by them. Beat them up, beat up those journal entries. You'll do well. Let's see what our learning objectives are for this section here. All right, well, we want to calculate the carrying amount of payables and accrued liabilities, prepare journal entries. What's carrying amount? We see that a lot. Well, carrying amount, remember, is the original value. So for assets, that's the cost. Here, what's the original value of that payable and any adjustments to it? So for example, carrying amount of a truck is $10,000. If you add to it, you capitalize costs, maybe you improve it, the carrying value goes up. If you depreciate it, goes down. All right, and we'll have journal entries for these payables. We want to identify and calculate liabilities that arise from exit and disposal activities. So we'll see what that means. Basically, when you abandon a business segment, and determine the timing of the recognition of these in the financial statements. We also want to calculate the liabilities and assets resulting from asset retirement obligations and prepare journal entries there. Lastly, I'll drop down so you can read, reconcile and investigate differences between the subledger and general ledger for accounts payable and accrued liabilities to determine whether an adjustment is necessary. Do we need to adjust our liabilities for any reason, right? Do we owe more possibly? Do we owe less? That could be important. We'll see that and more. Let's dive in.